Hi, today I will present our English Accounting Module 13. In this module, we will discuss several topics. There are amortization versus depreciation and an overview. And we will always we will also talking about advertising. Okay, now I will first discuss about the amortization versus the depreciation. The cost of business asset can be expensed each year over the life of the asset. Amortization and depreciation are the two methods of calculating value for those business assets. The expense amount of subsequent use as tax deduction reduce the tax liability for the business. In this article, we'll review amortization, depreciation, and one more common method used by business to spread out the cost of an asset. The key difference between all three methods involves type of asset being expanded. First, key takeaways. Amortization and depreciation are two methods of calculating a value for business asset over time. A business will calculate this expense amount in order to use them as tax deduction and reduce their tax liability. Amortization is the practice of spreading an intangible asset's cost over the asset useful life. Then depreciation is the expensing of a fixed asset over its useful value. A third method of expensing business asset in the depreciation method, which is an accrual accounting method by businesses that extract natural resources of the earth, such as timber, oil, and mineral. Now I will dig more deeper about amortization. Amortization is the practice of spreading an intangible asset cost over the asset useful life. Intangible assets are not physical assets per se. Example of intangible assets that are expensed through amortization might include patent, trademarks, franchise agreement, proprietary process such as copyright, cost of issuing bond to raise capital, organizational costs. Then I will also dig more deeper about the depreciation. Depreciation is the expensing of fixed asset over its useful life. Fixed assets are tangible assets. So, before we talk about the intangible asset, then the method to calculate the expensing is amortization. Now, the difference of the depreciation is applied to fixed asset that are tangible, meaning they are physical assets that can be touched, that can be felt, that can be seen. Some example of fixed intangible assets that are commonly depreciated include buildings, equipment, office furniture, vehicle, land, and machinery. Since tangible assets might have some value of at the end of their life, depreciation is calculated by subtracting the asset salvage value or resale value from its original cost. The difference is depreciated evenly over the year of the expected life of the asset. In other words, the depreciated amount expended in each year is tax deduction for the company until useful life of the asset has expired. For example, an office building can be used for many years before it becomes rundown and sold. The cost of the building is spread out over the predicted life of the building, with a portion of the cost being expensed in each accounting years. Okay, now I will discuss our last topic, advertising. The goal within advertising is first and foremost to grab audience attention and create certain need, desire, or a feeling. But with increased access to information, product, and services all around the world, it creates an even higher level of competition for a company reaching and connecting with their customer. With increasing competition organization need to find a new way to reach customer base and possible customers. Organization can use different methods like direct advertising, word of mouth advertising, sponsored advertising, and hidden advertising. Now I will discuss about all of that. The direct advertising is often synonymously with direct marketing. Is a solicitation or advertisement driven directly for a brand or its agent of distribution. Word of mouth advertising is interest in company product or service is reflected in their daily dialogues. Essentially, it is free advertising triggered by customer experience and usually something that goes beyond what they expected. Then sponsored advertising. Sponsored advertising occur when party agrees to support the other exchange of predetermined amount of exposure. Then the last is hidden advertisement. Hidden advertisement is an advertising which make unconscious influence of consumer consciousness using spatial video and audio effect. Okay, thank you guys for watching. I hope I can enjoy it, and I'm sorry for the noise. Uh, Thank you. Good night.